Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rourke with Dave Chatterton of Strategic Farm Marketing, a down day in everything except for the hogs. Okay, Dave, let's talk about the grain trade. First of all, soybean seeing some pressure despite the fact that we saw another 4.5 million bushels of China business. President Trump and President Xi actually talking again. Is the problem with this market we need some confirmation of more soybean business from China?
Yeah, Michelle, I think that's what it comes down to. Certainly, I think the market was priced in, and we got a boost off of that initial tranche of business that was consummated after the trade deal in South Korea, and we'll take everything that we can get, but we have a long way to go here to shore up our exports on the balance sheet. We had another 2 cargoes announced this morning or confirmed to China that were sold. The trade sees those as part of the business that was done last week, and new business looks like it's pretty slow or nothing happening on that front here at the moment. We did have, as you mentioned, kind of a surprise here that the White House announced that President Trump and President Xi had held a phone call this morning. Ag was certainly part of what they talked about. We had President Trump putting out a Truth Social post saying that, soybeans were part of that discussion. U.S., ag markets were part of that discussion, that it would be a great deal for U.S. farmers. But I think the price action here tells you that, it's not going to be just talk at this particular point. We're going to need evidence of more sales coming down the pike. And there's also some tension in the trade on that trade front between the U.S. and China as it relates to Taiwan. Japan is involved in that discussion as well. So a lot of things going on, as there usually are here, and we'll have to wait and see. But I think the market right now is a show me type of a market regarding any kind of a price rally as related to more Chinese business.
So the trade is estimating about 3 million metric tons of China purchases of soybeans so far. How many more sales or how much more do we need to see, Dave, before the funds decide, hey, we're going to jump back in here and start buying, or we see a rally?
Yeah, keep in mind, Michelle, 3 million metric tons is the amount that's been talked about. We'll call that 110 million bushels. Last year, China bought over 800 million bushels from the U.S. So I think going into the trade deal here, we were hoping that maybe we could recapture about half of that. We still have a long way to go to get to that point. Without that, we have an export situation on the balance sheet where we come up short and where the carryout increases and the balance sheet gets heavier. So a long way to go in terms of shoring up that balance sheet to the point. I think the problem that the market is wrestling with here in the meantime is just looking forward. If you put a 5 to 6, 7 week transit time and placement time on new sales here to China, you're talking about late Jan and into February. And right now, those February offers out of Brazil on beans, about a 90-cent per bushel discount to what we can originate from the U.S. Gulf. So the math on that is questionable. We're going to need some political will to make that happen. And the question is whether the Trump administration can make that happen. And I think the market is willing to be a little bit patient on that. But like I said, we're going to need to see the sales on paper before it jumps in terms of price.
Yeah, Dave, time is not on our side when it comes to China business before South America's crop comes. Also, export inspections are still lagging behind last year's pace, aren't they?
Yeah, and not by a little bit either, by about 56% here, almost 325 million bushels, Michelle, in terms of the soybean pace. So that's how far behind the seasonal pace that we are to hit the USDA target. So, again, adding those 325 million bushels back onto the balance sheet takes your carry out to a point that gets very heavy very quickly.
Soybeans down from a technical standpoint right into some support areas. Those need to hold this week, don't they?
Yeah, we're right up against those lows from last week, really on all of these, on the corn, soybeans, and wheat. So it's not the end all be all in terms of technical, but it certainly feels like the momentum that we had coming into last week and through the early part of the week has certainly waned here a little bit. And we're looking for that, the old saying, you have to feed the bull here. And we're looking for something that's going to feed that narrative. And right now we're struggling to find it technically.
Let's also talk about corn and wheat futures, really the entire complex. We're going to have light volume, holiday trade, and first notice day on Friday. So could we continue to drift here, you think?
Yeah, definitely, Michelle. It feels like a week where, like I said, we're in a hurry to kind of go nowhere. We're looking for kind of lacking some fresh inputs here. And into a holiday week here. We've seen a number of the speculative traders who have kind of closed their books already or getting ready to, especially with the expiration of the Dees contract here, or first notice day coming up at the end of the week. We've got a midweek closure here on Thursday and what looks an abbreviated trading session on Friday, and volume trailing off today, and suspect that it's going to continue to get worse as we go through the week here. And again, I mean, weather in South America seems stable. We're looking at that as a headline. No real issues there. They are a little bit behind last year's planting pace, but it looks like the weather in the dry areas will improve here in northern and northwestern Brazil here this week and allow that planting to catch up.
Dave, you mentioned that we're testing support, just like in soybeans in the corn market. What areas are you watching on decent March contracts?
Yeah, Michelle, I mean, we're looking at lows from last week. So in decent corn's case, you're talking right in this 422, 423 area. If you talk about, January beans, you're talking right around this 1120, 1122 area. And for wheat, again, right around that 520 number. If you fall below that, like I said, not necessarily the end all be all, but it is a sell signal to the momentum traders here. And you have to keep in mind that sometimes when we get these low volume type of trading in holiday weeks, volume can be accentuated. And because of the computers and the way that they trade, and the in and out nature and the volume with which they can create in a very short amount of time, we have to be aware of that. And so I think the risk on that right now is to the downside if we're able to move and close below those support levels.
Although we did get export inspections out as well on corn and wheat, and those actually looked pretty good this morning, didn't they?
Yeah, as I mentioned, corn right now, almost 75% above the pace that we had from a year ago. About 225 million bushels over the pace right now on a seasonal pace analysis in terms of the USDA projection. We'll see if that slows down a little bit here after the first of the year. But right now, corn is a record crop with record demand, and demand really outperforming in terms of the balance sheet. The balance sheet actually looking like it could tighten up just a little bit here in terms of corn.
Yeah. Dave, do you think the wheat market is at all watching what's going on with these Black Sea talks or not?
Yeah, Michelle, I mean, it's watching them, but I think with a little bit of a longer term I think here in the near term, not much of an influence if we get a peace deal broker or if navigation fully reopens. I think what we're looking at in the situation for U.S. exports, we were waiting for the Black Sea to kind of rotate a little bit higher, give us a chance at some exports. We got the Black Sea levels to do that, but the Argentine levels then fell below the U.S. offerings. And so right now, Argentina has the cheapest wheat in the world. If we do get a peace deal in the Black Sea, particularly for Ukraine, and they're able to expand their acreage and their production in the coming years, certainly that's more competition for us in a market that's already well supplied, if you will, in terms of global wheat exporters. So nothing that we can really turn over in terms of a bullish scenario in that situation.
Cattle market, limit down in both live and feeder cattle futures in reaction to Tyson announcing they're closing the Lexington, Nebraska plant. Amarillo is going to go to one shift. How much lower do we have to go to price this in?
Yeah, it's a good question, Michelle. I think the problem is not necessarily the announcement on its face. I mean, Nebraska is a heavily populated meatpacking state. There's certainly other plants there that can absorb that. Tyson is talking about taking the capacity of their other plants from 80% to 90%. We have enough capacity to meet the demand here in the near term. It's just running these plants a little bit harder. I think longer term is really the issue of where we're going to go and what the cattle supply is going to be. And synthetically at the close here today, we were only trading about $1 to $2 lower here on Monday's close in terms of where that, where the market was trading with options below the limit. We'll have expanded limits tomorrow. And, it's the fund length, I think, in this marketplace that needs some attention. We're running still dated or delayed on the CFTC data, but we have it through the week of October 7th, where we had the funds long about 116,000 contracts. So they've certainly kept back on that here in the time since, including late last week and today, but still some significant fund length in this marketplace. And I think it's a momentum thing of when that length in the market is either pared back to a point that it feels comfortable, or that we're at a point where the technicals have flattened out a little bit.
Is that the only point at which Dave will go back to starting to trade fundamentals?
Yeah, I think so, Michelle, here. And it's, you get the near-term cloud of war and the long-term, mean reversion back to mean being the fundamentals. And when you look at these fundamentals and the cattle on feed numbers that we had on Friday, really wildly supportive. And we've got on feed numbers that are a little bit above a year ago, heading into the first of the year, but certainly by the middle of the first quarter, those numbers are going to drop well below where we were a year ago on front-end fed cattle supplies. And the placements data that we've been looking at here in the last few months certainly makes for a tight market going forward here. So the story in beef, I think, far from over. It's always good to see a good correction. This one's been a little bit more violent and a little bit more political in nature than we've talked about. There's also some rumblings out there that the Mexican border may reopen here by the first of the year. Those are nothing but rumors here, nothing that we can confirm at this particular point. But a lot of weight on this market here in the front of in the near term.
Yeah, cattle and feed report on its own would have been fairly bullish for the market, but it just got overwhelmed by all this other news. What about the hog market? Was it short covering, unwinding of spreads with the cattle market, or what?
Yeah, I mean, certainly some spread unwinding there. I think it's also a market that if you look back 7 weekly closes lower consecutive, in a row here for the hog market. So certainly due for a little bit of a bounce, at least to start the week. Where we end the week and where we start the week in the hog complex, often two very different things. So we have a ways to go, but at this point, we'll take whatever support in the meat complex or the protein complex that we could find.
Thanks so much for joining us. Dave Chatterton with Strategic Farm Marketing, and that is Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Talk with your retailer or visit Brevant.com/jackpot to get started.